Global Markets Reporter at Nasdaq. We're coming to you live from Las Vegas at the Global EQ Derivatives Conference. Joining me for this segment, we have Garrett DeSimone. He's the head of quant strategies over Optiometrics. And we're going to take a look at Treasury volatility, which is often underappreciated in the equity markets. Garrett, thank you so much for joining us. And you're the first person I've spoken to about Treasury vol, even though it is underappreciated when you take a look at your equities portfolio.
So we like to look at a few different things at Optiometrics in our research, and what we found and what we've seen in our research is that Treasury vol tends to actually lead equity volatility. So Treasury vol is causal to equity volatility in the markets, and this is often overlooked. And if we think about basic stock valuation, there's two things that you can use to value stock. It's cash flows and discount rates. So investors should really care about what Treasury markets are looking forward.
Are they really that correlated, though? If you take a look at the chart, they will move in correlation with each other?
So it's a complicated relationship throughout time. But in general, what we find is stocks, for example, that are positively correlated with Treasury volatility often have low returns. And the reason for this is they act as hedges against an uncertain rate environment.
All right, and has that relationship changed at all as we've seen more volatility come back into the market overall?
So recently in the last few years with the increasing rates by the Fed, we've seen a reversal of relationships, especially for certain industries. And one big example is for tech. So in the tech industry, Treasury vol is actually presenting a large headwind for future valuations.
And what is the latest interesting development that's come out of the Treasury vol market?
I'm sorry?
The latest interesting development.
So what we're seeing is that these Treasury stocks that were positively correlated with Treasury vols have actually been performing pretty well recently. And we believe this is due to Fed uncertainty with their rate hiking cycle.
All right, now looking forward through the end of the year, what are your just overall vol expectations?
So I believe vol will stay high, and it will. Part of the Treasury relationship is also related to the tensions with China. So we expect yields to remain high as investors flock to safety in these Treasury-related assets.
All right, Garrett, thank you so much for joining us at EQD. And thanks for joining me throughout the day on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.